Hey everybody, welcome to Mortgage Today for Thursday, May 23rd, 2024, and oh, what a day it was. A rough open for UMBS, down 27 basis points bright and early. S&P futures were down 9 points. Yields were mostly flat overnight with a bit of volatility in sympathy to European bond market volatility, but the domestic session was underway at almost perfectly unchanged levels. And then we got the S&P Global PMI. So services came in at 54.8 on a 51.3 forecast. It was 51.3 previously. Manufacturing came in at 50.9 on a 50 forecast. This probably won't be enough to derail our flat trading week, but the S&P PMI was definitely causing intraday volatility. Existing home sales fell 1.9% to a seasonally adjusted annual rate of 4.14 million. Home sales changed little overall, but the upper end market is experiencing sizable gain due to more supply coming into the market. Yay, more rich people homes. Housing inventory is up, which is good news for activity overall. It rose to 1.21 million units, which was a 9% bump up from last month and 16% year over year. Keep in mind that typically 30-40% of these are under contract. This represents a 3.5 month supply at the current sales pace. This is still on the low side. A balanced market is about 6 months worth of inventory. Median home price rose 5.7% year over year to $407,600. The FOMC minutes from May meeting yesterday support a higher for longer narrative. Some of the participants raised the possibility of unusually strong seasonal patterns might have been behind the negative behind the negative surprises in inflation at the beginning of the year. They also noted signs that the consumer is beginning to run out of steam or credit card space, noting increases in credit use and buy now, pay later program usage. Perhaps fate was tempted by our persistent focus on this week's absence of big ticket market movers. Or perhaps this is simply the biggest possible reaction to one of the week's only potential market movers coming in much higher than expected. After all, the mantra has been that nothing that happens inside a range of 4.34 to 4.5 in 10-year Treasury is interesting. While that remains true in the bigger picture, today's reaction to the S&P Global PMI was about as interesting as an uninteresting thing can be, causing an immediate spike from 4.42 to 4.49 plus. While the size of the beat is certainly surprising at 54.8 versus 51.3 forecast, the market reaction is less logical. The UMBS closed the day down 26 basis points at 100.11. So at 100.11, geez, we're just barely above par, but we're right there underneath that 50-day moving average, which is the black downward trend line. We got kind of dual support happening here at the 200-day moving average and the 25-day moving average. We also got news that the average retail mortgage lender lost only $645 per loan in quarter one, but that's actually kind of a good thing across the production and servicing businesses. 59% of mortgage companies were profitable, the highest level in 8 quarters. So that tells you that the big producers, they're doing a ton of loans at super discounted rates, are losing so much money that they're bringing that average loss of $645 per loan down, because 59% of companies are actually profitable.